You're not a fan of Larry Kudlow saying that the trade talks have a good vibe. Why?
Well, because I think that means that not much progress has been made. When you have to characterize it as having a good vibe, that means that we haven't gotten anything concrete accomplished. We're getting very close to that March 1st deadline.
President Trump is now threatening Europe with auto tariffs. Should investors be worried?
Well, investors should recognize that the trade wars could get worse, not better from here, because we do have a very distinct possibility that we embark on tariff wars in another theater with the European Union. So what I would say is that shouldn't scare investors away from markets, but they need to recognize that that should be priced in, especially with regard to European and U.S. equities.
I'm glad that you bring that up because I want to talk about trade wars in general, but also one other headline that we're all seeing is Brexit, and I'm wondering if a no-deal Brexit, will that impact U.S. investors?
Well, I don't think a no-deal Brexit will impact U.S. investors very much at all, but it should be very significant for UK investors as well as European investors. I think as we hurdle closer to that deadline, there's just more uncertainty, less clarity on what's going to happen. So we're likely to see businesses really decrease capital spending, maybe curtail capital spending altogether in this environment because there is so much uncertainty about economic policy. And that is likely to manifest itself in diminished earnings and, of course, impact equities there.
One other headline that we're seeing very frequently is the Fed, and they just released their January minutes. Now I'm wondering, going forward, what do you expect from the Fed?
Well, it's really interesting to see what we saw in the most recent FOMC minutes. Just a few months ago, we had a Fed that appeared to be going in a very different direction. As recently as October, Jay Powell was talking about how we're a ways away from neutral, so to speak. And suddenly, in the last month or so, the Fed has done this dramatic about-face. And so while many may be very happy to see the Fed become more dovish, as am I think the abruptness of this change is a bit worrisome. And so I expect markets to be laser focused, not just on economic data, but on what different FOMC participants say going forward about their assessments regarding the economy. Because this has been quite a change, and it just calls to mind questions about what are they seeing or what are they worried about that makes them change so much. And it's not just, of course, rate hikes, but the idea that it looks likely that they would end balance sheet normalization this year. So in general, though, that is a positive, certainly for equities, and so we should recognize that, but also ask questions about why they've made this kind of change. And I think that's what investors will be looking for going forward.
Now, this is my favorite question currently, is about headlines, because we've talked about the Fed, we've talked about Europe auto tariffs, we've talked about Brexit, and we've talked about the trade war. These are all big headlines that have the possibility to move markets, and I'm wondering, are they? Do you think they are?
Absolutely, and they should. If you think about the trade wars, for so long, markets really ignored that issue. It wasn't priced in, and I think there was this general consensus that investors didn't have to worry about it because the administration was really just threatening, it would never follow through. And so now we've kind of gotten to the point where we've priced in trade wars, and I think that makes sense. Now, of course, we're too quick to price in any kind of improved sentiment around trade wars, and I don't think we're recognizing the kind of threat that expanding trade wars to Europe will have. But in general, it's a good idea to price in that, which impacts fundamentals. And I would argue trade wars do impact fundamentals, and we've already seen that in a lot of earnings reports.
For investors who feel overwhelmed by the amount of headlines hitting the news, what's your advice there?
Well, actually, I think I would quote Gilda Radner, who said, it's always something. And so we have to recognize that while it seems like there's a flurry of geopolitical risk right now, and there is, we've seen this before. There have been other periods where we've had a lot of geopolitical risk. We've had other issues facing markets. And despite all these headwinds, stocks over the longer term tend to move higher. And so for those with a longer time horizon, this is an opportunity to examine asset allocations, ensure we're comfortable with them for the longer term, and also take advantage of opportunities that could be created by market sell-offs or greater volatility. Certainly this environment, I think, is one in which we need to be more discerning and more selective, but I expect investors to do that. So don't think of it in terms of risk on versus risk off, but in terms of risk aware. I mean, we have to embrace risk asset classes. We need to have that exposure to asset classes that have historically delivered solid returns over the longer term, but we just need to be discerning and diversified.
Thank you for joining me.
Thank you.